Greetings, members one and all of the Salivation Nation. Wow, what a shocking move for silver as measured by the debt clock, $724 per ounce. Let's explore. Now, many people might think that that is a price, but it is indeed not. This 1 troy ounce of silver is the most basic and most common measurement of the weight of silver. And also the amount that it would cost. Typically is right now standing at about $21 and change. And the numbers I'm going to give you here are by no means a reflection. I have to remind folks of this every time I do a video like this, and I'll talk about that here in a moment too, what this actually means. Because it's not that silver should be, could be, or would be, or will be $724 an ounce. No, indeed it is not. We're looking at the debt clock, and the debt clock, the one number we can be assured that will continue to rise is the U.S. national debt. In fact, when I did this video in my playlist a month ago, it was $31.1 trillion. Now it is $31.2 trillion. And it's always exciting to kind of see how that number has changed since I've been documenting these in this series of videos. But let's take a look at this number down here. This is the number we're looking at, $724 per ounce. It is a ratio. It is not the price. It is the dollar to silver ratio. If you look above, you can see that it is the year-over-year increase in the U.S. M2 money supply divided by the yearly world production in silver in ounces. And it is a telling number. The reason why I do these videos is because even though it's not a reflection of the price, it is a reflection of how out of control the Federal Reserve is and how out of control our government is in spending. Look at this, U.S. debt to GDP ratio. Absolutely insane. And U.S. federal debt to GDP ratio is absolutely insane when you look at it through the lens of history. And even this is still higher than it was in World War II, or very, very close to it. And we're out of the COVID pandemic, and that was a time, and many people think, was a wartime effort or akin to it in terms of resources because we shut the economy down on purpose. So therefore, government spending was put into place in order to keep the economy going. But the thing is the U.S. government has been printing money, or the Federal Reserve has been printing money with the blessing of the U.S. government for years. In fact, if we look at the scale of the whole length of time here that we have for the Federal Reserve, we're looking at the FRED economic data from the Federal Reserve, and this is the M2 money supply. And this goes back to 1960 up until today. And you can see it's been a relatively steady increase. Even through recessions, we've not seen a whole lot of extra money spent more than in the average incline. But we did start to see it incline more dramatically after the recession, with the oil embargo and stuff, and between in 1974 through 1975. So that one took about a year. And then we've seen it increase at a much higher plane here throughout history. And the increase in the money supply has increased dramatically throughout the course of history, but it really ramped up over the past 2 or 3 years here. And 3 years is especially important. I would say about 2 or 3 years is especially important when I talk about the timeline of this series. But look at here, during the COVID pandemic, it just ramped up and it continued. Maybe not at the same rate, but it did continue quantitative easing. It's only now, over the past year, in fact, starting in April, they started to decrease. No more new money printing, although they kept up with the pace of it. It's quantitative tightening is what it is. And we're starting to see a slight decrease in the money supply. And that is through less printing. It's starting to go down a little bit more here as inflation is ramping up, and that is because of the circulation of money and the like is fallen back since the Federal Reserve has raised rates. So that is part of the reason why we're starting to see some numbers pull back. Let's look at the debt clock here. Let's look at this. So last month, we saw it over $900 per ounce. This is a continuation of that, but it has broken a record now compared to where we were before when this series started. In fact, let's take a look at that, because look at the history of this. I encourage you, if you get a chance to go through this series, it'd be very interesting to see what the debt clock showed during the course of all of these videos, as I did document that. The very first video was from over 3 years ago. Should silver be $844 per ounce? And in this video, I discussed the debt clock, and this started the series on how it has increased dramatically with the amount of dollars printed compared to the amount of silver mined per year. So it has broken that record from over 3 years ago. And why is that? Well, largely it has to do with the amount of silver being mined. Now, we don't have official numbers from the USGS yet, but we do have reports from mining companies, and I've covered those recently, where 2 huge mining companies have reported record increase in silver production. And production of silver that makes it into the market for use in industry, in jewelry, and for bullion investment bars, coins, and rounds. That is starting to increase now because of demand of silver is increasing. So when you take a look at that, the amount of silver that is produced, not consumed, in other words, it's not above ground stocks, this is the amount that has been produced in silver. And the whole idea behind this, it illustrates the idea that, yes, it does take a lot of effort to mine silver, a lot less effort to digitize or to print a dollar bill. And for each of those dollar notes printed, there is 724 of those for every ounce of silver mined. Still an alarming rate compared to the 2, but keep in mind, production is up this year, whereas money printing is going the other way. So this is why this is occurring. But keep in mind, the debt clock rages on, as you've heard me say in the past. And deficit spending continues at an alarming rate. The U.S. national debt is continuing to climb. When you think about the amount from 31.1 to 31.2, which in the span of 1 month is absolutely incredible. So things are still going downhill quickly. How long will this continue? Until it doesn't. And when won't it? When people start to lose faith in the dollar. That's when we start to see things move in the other direction. When we see the M2 money supply, and we look at this chart, we can see that there's still a lot of money being printed on a monthly basis. It's not like they're stopping and a lot of money circulating on a monthly basis. Let's go back to the national debt clock. You can see it here. How much money creation is happening right now. It's insane. Look at that. Absolutely insane to see how much money is increasing right now. Look at that number tick up. Each second, all those dollars. That from the time that I'm recording this video, if you pay attention to this number here, I would love to earn that in a year. Shoot, I'd love to earn that in 10 years. It's $230,000, $40,000. Goodness gracious. By the time we get through that, that'd be a good income for, of course, each time those dollars are printed, they become worth less and less. In other words, that's what inflation illustrates here. It shows us, and is on target of about 2% per year by the Federal Reserve, and now it is close to 8% per year, on top of a high 6.2% from last year at this time. So there's where we are at with that. And you can see the dollar to gold ratio is even higher now, but it could be that this number has not increased. But nonetheless, it just goes to show you how rare gold is and how much of it is being mined. And I haven't really kept up with those numbers as much compared to the dollars that are out there. But that is where it is now. Now, if we could look back in time, through the course of time, we can see that when the Federal Reserve Act started in 1913, it was at $2.65 per ounce, which is probably fairly close to the actual price. Adjusted for inflation, by the way, then, and same thing for gold as well. But nonetheless, there's where we are at, and so I hope that helps explain it. And again, looking back through the course of time, silver and this playlist. In fact, it might be a good idea to go watch this original video to see what the debt was and see what the line of thinking was with how that is being justified or talked about. But very interesting indeed. So there's where we are at. $724 silver. Pretty remarkable. The overall lesson, the overreaching lesson here, no matter where this number goes, in fact, we could see it fall lower. It would not surprise me to see it fall lower in due course. And if it does, the message remains the same, because it'll never go down to match the price, by the way, just so you understand. It means that they can continue to print money much faster than the rate of production of sound money, which is silver. So let me know what your thoughts are in the comment section below. Very interesting indeed. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.